And on the USDJPY, we have a sell position running at this point. Remember, at the beginning of the week started on a bullish note as we saw how price action broke out of that important structure at the 131.00 level. And we were able to position ourselves in such a way that we caught this move around this temporary demand zone, which was identified at the beginning of the week around the 131.900, and in fact we were part of that buy position which moved about 100 pips in our direction before we started witnessing the selling pressure yesterday in the last 48 hours. Now, during the live session yesterday, I told you that I have a buy position trigger that we should buy above this level and move our stop loss accordingly to lock in some profit here or to break even, and we were actually taken out of that position as price action broke down that structure. And one thing I told you yesterday is that we shall be using this bearish trend line to guide our trading activity. That was one. And then I also told you how important the 131.600, the breakdown of the 131.600 level, will be triggering a sell position for us. And this is exactly what happened during the New York session yesterday. We saw the breakdown of the structure triggering our first sell position, and a further breakdown of the 131.200 triggered the second position on the USDJPY. And if you have been part of this trade, kudos to you for being on standby to catch this move, as you will currently be running with about 77 pips on the first position, and if you are taking the second position below the 131.200, you will be running with about 35 pips in profit, with a total of over 100 pips at this point. Now that we are going into the New York session today, what is going to be our plan? What are our expectations on the USDJPY? Are we going to continue to see the sell momentum continue to the downside, or is it just a false breakdown that might likely lead to a significant bullish momentum to the upside? Well, before we answer that, let's run through the daily time frame. Let's have an holistic view of what is happening here. Let's refresh our memories on what our expectations were at the beginning of the week. Now, at the beginning of the week, we laid emphasis on how the USJPY has been bullish in the last couple of years, and in fact we had the bullish range to emphasize the strength of the buyers at this point. However, things got a little bit interesting in the month of April of last year. As you can see, price was initially caught within a channel right within the 131.00 level and the 127.00 area to emphasize some level of indecision around that area before we saw the breakout retest of that 131.00 level, which incited that bullish momentum that we witnessed during the second half of last year. Now, price action dropped back into that zone, that is the 131.00 level and the 127.00 area. In the last 3 to 4 weeks now, we have seen a consolidation phase around that area. And one thing about the structure is the fact that sellers were unable to break down the 127.00 level despite the strong selling momentum that we have witnessed here in the last 3 months. So the inability of price action to break down the 127.00 level, also sharing a beautiful confluence with that bullish trend we identified earlier, was a beautiful sign that buyers are still very strong in this market. And if we compare the structure with what has happened around this area in the past, especially in the month of April/June of last year, we saw that that level also has been a strong buying niche, and which led to the breakout of the 131.00 level that triggered that bullish momentum that we saw. Now we have a similar situation unfolding right now as price action. Let me zoom in so that we can see things more clearly here. So we have a similar situation right now after sighting this engulfing candle following the positive NFP on Friday, bringing price back into the 131 level, and we saw a bullish momentum starting this week above the 131.00 level. And in fact, this transitioned into a very beautiful reversal pattern. If you take into consideration the impulsive move to the downside, we saw the first touch at the 127.00 level, price action was unable to break the previous low, hereby giving us a higher low. And you can see what this has transitioned into a very beautiful reversal pattern in the form of a double bottom structure. And whenever we identify a double bottom structure like this, what we want to be looking out for next is to identify a neckline which shares a beautiful confluence with the 131.00 level. So we want to be seeing a breakout of the neckline area to make this reversal pattern a confirmed and mature one, which actually happened at the beginning of the week. A retest of structure followed by buying pressure above this level will definitely be a beautiful opportunity to join a rally to the upside. But the way things are looking right now in the last couple of days, it's likely we saw an engulfing candle, and to this candle we are not sure how today's candle is going to close. But one thing for sure is we want to see how price action is going to be reacting with this neckline area, which is sitting at the 131.00 level, to decide what our next line of action will be. In fact, I would love to see buy pressure around the 131 level to confirm that this is a strong reversal pattern, so that we can join the bullish momentum to the upside. But if price action breaks down the 131.00 level, where price action transitions into selling pressure below that structure, we might likely be having a sell momentum back again into the 127.00 area. So with the information we have gathered here on the daily time frame, let's scale down to the 1 hour time frame and let's see how price action is actually reacting to the 131.00 level, after which we are going to be making a decision for today. So we are back on the 1 hour time frame, and if we look at what happened, first of all, let's acknowledge the 131.00 level, which is around here, and price action is currently trading below that structure at this point in time. Now, taking into consideration the previous impulse leg here that started last week, that is started from the 128.00 level, as we saw it rise all the way into the 132.900. And you know, from a technical standpoint, whenever we have an impulse leg like this, at a point in time, participants in this market who took advantage of this bullish momentum right around the structure will at one point in time initiate a profit-taking activity, which will be reflected on the chart as a retracement of that previous impulse leg. And if you remember, during the live session yesterday, we were able to identify a potential area where the retracement phase might end before the second wave of another bullish momentum will happen. And in fact, we were able to identify somewhere within the 50 and the 78.6% of that previous impulse leg that we have here. And one thing about this thing is that price action appears to have come into that area, as we saw price action test the 50% retracement of the previous impulse leg here, and price action is yet to break down that structure in the last 24 hours. Remember, we have a sell position running. We have one here. We had one triggered at the 131.600. We had a second one triggered at the 131.200. And for those who are in this trade, kindly move your stop loss to around the 131.200 level, as we want to be locking our position, securing our position to ensure that we don't get caught out in anything that might happen at this point. Now, considering the structure we have here, and considering the fact that price has been caught within a channel, so we have a channel here, we have the 130.500, which has been the support level in the last 24 hours, and the 131.370 level, which has been the resistance point in the last 24 hours. So we want to be seeing a breakout or breakdown of this channel to give us a signal of where price action will be going for the later part of this week. So if it so happens that price action breaks down this 130.500 level, retest of structure should be giving us an opportunity to add more position to our sell trade. And remember, all this area still falls within our TP target for the sell position, so the maximum point is the 129.00 level. And within the zone, if we at any point in time start seeing some buy pressure within the zone, we should be getting ready for another wave of bullish momentum. However, if price does not drop below the 130.500 and instead it breaks out of the resistance point at the 131.370 level here, a level which also shares a beautiful confluence with that trend line that has been guiding bearish momentum since the beginning of the week, that would be a beautiful signal that this bearish trend line is no longer strong enough to hold selling momentum, and a buy pressure above the structure or around the 131.700 on our lower time frame would be a beautiful opportunity for us to join a rally to the upside. So it's a beautiful setup we have here, very simple setup on the EURJPY, where we already have a channel identified at the 131.370, which is the resistance point in the last 24 hours, and the support level at the 130.500 in the last 24 hours. So what we are looking forward to right now, for those who are already in the sell position here, kindly move your stop loss, secure this current sell position right now, as we look forward to another signal, probably in the form of a breakdown of the 130.500 for additional sell position, or a breakout of the 131.370 level for a buy opportunity. So let's keep this in mind. Munch my screen if you want, so that you can use it as a reference point when you're about to make your individual decision.